July 2020, my goodness, what a month in real estate. We saw record high volumes of new listings hitting our marketplace. We saw record high volumes of sales happening. We saw appreciation in every single housing class in terms of price. And we've now officially transitioned to a seller's market in every single housing class, including homes with acreage. But given everything that's happening in the world, how sustainable is this? Let's get into the numbers. Okay guys, let's get right into it and look at the HPI pricing index for every home class in the Fraser Valley. So we'll start with detached homes. In July of 2020, the HPI index came back at 1,008,000 for detached homes. That's up from 994,500 for June of 2020. Apartments were at 437,300. That was up from June of 2020, which was 435,300. Townhomes were at 563,200. That was up over June. That was at 559,600. And homes with acreage, we don't really have enough data to do the HPI pricing index for homes with acreage, but we can look at average sale price, and that was right at 1.9 million. Looking at total number of transactions, in July of 2020 in detached homes, there was 867 transactions for detached homes, up from 655 transactions. Apartments, there were 430 transactions, up from 407. Townhomes in July, there were 555 transactions, up from 451 transactions. And homes with acreage, there were 80 transactions, up from 50. Looking at new listings, so new inventory hitting the market, in July of 2020, there was 1,395 new listings hit the market for detached homes, up from 1,342. Apartments, 866 new apartment listings hit the market, up from 815 in June. Townhomes, 805 new listings hit the market, down just a little bit from 820 in June of 2020. And homes with acreage, there was 118 new listings for homes with acreage, up from 105 in June of 2020. Looking at overall active listings, I want to just look at the whole market, and this is part of the reason why we're seeing upward pressure on pricing, upward pressure on the sales to active ratio as well, is that we just don't have a lot of inventory on the market right now. If we compare July 2020, there's 6,209 properties for sale in the whole of the Fraser Valley compared to July of 2019, where there was 7,593 homes for sale. That's a market difference in the amount of inventory available, which again is putting upward pressure on pricing. Looking at sales to actives kind of gives us a litmus test for who's being favored in a market. So we call it balanced market anywhere between 12 and 20%. Above 20%, we say that favors the seller. Below 12%, we say that favors the buyer. So right now, across all property classes, we are in a seller's market. So in detached homes, we're at 32.7% sales to actives ratio. Apartments, we're at 24.4%. Townhomes, we're at 44.8%, so a strong seller's market for townhomes. And homes with acreage, we're at 21%, so a small seller's market, but the first seller's market I've seen in homes with acreage in a long, long time. So how is this happening? How are we in a bull market for real estate in the midst of a global pandemic? Well, I think there's a lot of factors at play here. One being March and April, things really shut down, and we're seeing a lot of pent-up demand coming back. Both on the sell side, again, we're seeing a lot more new inventory hit the market, but also the buy side, and more the buy side. I think folks have a bigger propensity to get out there and look at new places, especially if they feel holed up in their condo or townhouse and they're looking to upgrade. They feel far more keen to get out there and look than someone who owns a place, who's sort of on the fence on selling. They're far more likely to hunker down. So we're seeing an imbalance in terms of how many buyers there are to how many sellers, which is creating a seller's market across all housing classes. Another thing that can't be ignored is interest rates. Interest rates as low as 1.95% from the big banks, lower from smaller credit unions and online financial institutions and things like that. I mean, that's crazy. 1.95%. That's pushing darn near close to the inflation rate, which you have to think is going to go up. I don't think that these interest rates are sustainable. And as interest rates crawl back up, that is going to put downward pressure on pricing. So it's going to be interesting to see how this whole thing shakes out. Again, I don't have a crystal ball, and you know what? No one does. All the big institutions are changing their opinion on what's going to happen with the real estate market every month as we get more data. So my advice to you, if you're looking for a place, your family, you're doing some family planning, you need to upgrade to a house, or you're wanting to upgrade to a townhouse, you want to get out of the condo or townhouse, that sort of thing. And this is going to be a long-term hold. You're going to live here for 10, 15 years type of thing. I mean, if you find a place that you like, that you can afford, you're feeling comfortable in your job, you don't feel like you're going to lose your sources of income and be under any stress that way, I mean, I would go forward with it. If you're investing, or if you're really stretching yourself, I mean, I would just wait to see how things shake out, because with rent, you can always move, you can always downgrade your rental. If you're living in a place right now that you're sort of comfortable with, but would kind of like to upgrade type thing, I would just stick it out for a little bit and see how this whole thing shakes out, especially heading into the federal election in the US in November. We can't deny how tied the Canadian US economies are. So anyway, guys, those are just my thoughts, my overview of what's going on. If you have any questions for me, please feel free to call, text, email anytime. I'd love to talk real estate. Bye, guys.